Great. So Dan and I are glad to be here and would like to share with you some thoughts. So I think I'm going to start by asking Dan kind of what's his perspective about the antitrust regulatory landscape as it's changing under the Biden administration.
Well, thanks, and it's a pleasure to be here today. When Adam asked me to do this, I was very honored that I was going to get a chance, and then I saw the topic, and it was about antitrust as an example of regulation strategy. That's deeply offensive to an antitrust lawyer. We insist that we not only are not a regulatory body of law, but that we are in fact the anti-regulatory body of law. And then, in thinking about it a little bit more, I realized that at this particular time in history, maybe I'm not in quite the position to say that, that I may have been in the past, because it is in fact the case that with the advent of the Biden administration and the folks that in the Federal Trade Commission, the Department of Justice, importantly the White House, and very importantly also allies in the Congress, we seem to be moving in a direction in which antitrust is in fact much more of a regulatory issue. We're moving away from our history of being essentially a police power to try to take a constraint out of the market so that market forces themselves regulate the economy, into one where people think that's unsatisfactory, that more needs to be done to protect the consumer and the society from the various evils that concentration and monopoly and so forth present. And it's not just minor, it's not just on the edges. As we'll discuss here this afternoon, it's really based upon a belief that goes by a couple of different names. Some people call it the populist camp, some people call it the new Brandeis movement, which is based off of Louis Brandeis, who back in the early 20th century was a very strong proponent of the antitrust laws, who really think of antitrust as being fundamentally more of a check on corporate power rather than some of the narrower goals that have been prevalent in our jurisprudence and doctrine over the last 40 or 50 years. The tech industry is absolutely in the crosshairs of this. We'll talk about that for sure. It seems to be the poster child for this movement against unrestrained monopoly. But it doesn't end there, because it is in fact broader, and it's going to affect deals that you do and a lot of normal things that companies have maybe taken for granted, with a little bit of antitrust counseling on the side for quite a while.
So how do you think President Biden's executive order kind of fits into this?
So this is an interesting thing, in that what Marina is talking about is in July, President Biden, under the auspices of the White House Competition Council, which is part of the National Economic Council, issued a very long executive order on competition. It announces somewhere in the body of it 72 different initiatives that affect not only the mission of the antitrust enforcement agencies, again, the FTC and the antitrust division of the Department of Justice, but numerous other regulatory agencies as well, who in one way or the other are the agency that is entrusted with ensuring competition in their respective industries to at least some degree. It actually establishes this thing called the White House Competition Council, which is a task force of the secretaries and department heads of a number of federal agencies, actually 14 different federal agencies: the Department of the Treasury, Agriculture, HHS, Transportation, the Federal Reserve, the FCC, and so forth, and then the traditional antitrust enforcement agencies. Query how often they will meet. There's some of us who think they've had their one and only meeting, but under their auspices, there is a group in the White House that is led by Tim Wu, who is a very well-known former Columbia Law professor, who is a very outspoken critic of the tech industry and a lot of the practices of the tech industry, and also a central figure in this new Brandeis movement for the reform of the antitrust laws. Now, to a large extent, the executive order is just a symbolic statement of policy and priorities. It is intended to elevate competition concerns on the agendas of all of the agencies of the federal government that have any reason to pay any attention to those sorts of things. But it does have lots and lots of sector-specific initiatives. Like, for example, if you look at the section that's on the transportation industry, there is a particular statement that says that the Department of Transportation is to consider whether there should be better policies having to do with consumers getting refunds from baggage fees or from other things if their flight is canceled, if the Wi-Fi doesn't work. Query the White House getting involved in whether the Wi-Fi doesn't work and what to do about it. But it is sort of emblematic of an effort to try to elevate antitrust and consumer protection measures in the tech industry. It's clearly there's a general part about the tech industry, a statement: we're worried about platform monopolies, we're worried about tech monopolies, but there's also specific things like for example, a return to the net neutrality principles that were adopted during the Obama administration, but rather quickly thrown out in the Trump administration. So what does it all mean? Again, it's really dependent on follow-up, but it does say if you are in one of these industries that has been identified as needing some of these specific reforms or initiatives, it's something you need to keep track of. You probably will monitor that at the relevant agency, whatever that may be for your industry, and of course in Congress, but it is something that indicates that more is coming down the line.
Great. So later on we will talk about kind of the changes in the regulatory environment really driven by some of the changes at the heads of these different agencies.
Right.
But Dan, let me ask you right now about Lina Khan, who's been appointed at the FTC, and what you think that might mean for the business community.
Well, it means a lot. So Lina Khan is, again, another central figure in this new Brandeis movement. But in particular, she made her name also, actually, believe it or not, she made her name while she was still a law student, but then she went on to Columbia as well, in which she wrote a number of articles, one in particular that was a critique of antitrust policy towards Amazon. And it essentially was arguing that from her perspective, and this is very typical of this new Brandeis perspective, that Amazon was too big, it was too powerful, it controlled too much of online commerce. There were too many ways that the vertical integration that Amazon has, in that it's both a seller of goods, it's both a distributor of goods, it's the platform itself, it has a lot of different hats that it wears, that there were a lot of ways, and that was distorting competition around the edges of the platform. She then moved on to the House subcommittee for the judiciary that has the antitrust laws, and was the principal author of a very, very long 400-plus page report, which is essentially a manifesto about how antitrust needs to do something about Amazon, Google, Apple, and Facebook. And so that's the background that she had when President Biden appointed her to the role of the chair of the Federal Trade Commission. And therefore, it is really no wonder at all that what we are getting is a far more aggressive stance towards antitrust enforcement than we normally see in the switch between a Republican and a Democratic administration. And it's an interesting thing in our field, and like some others, that the swing between a Republican and a Democratic administration is usually not that huge. There's a generally common central core of antitrust policy, And then there are some issues on the margin. But this is much more substantial, and it is going to lead to a world in which a lot of ways, for the companies that are in the jurisdiction of the Federal Trade Commission, are going to see a lot more process, a lot more costly process in terms of getting certain things done, and much more aggressive substantive theories, I think, than we've seen in really quite some time.
So from a compliance perspective, what should people be concerned about?
So I think that antitrust compliance has traditionally mainly been about protecting against what we call the hardcore offenses, like price fixing and market division, keeping your executives out of jail, things like that. And the traditional antitrust training program or compliance program would be to identify the particular risks of those kinds of activities in the business. What industry groups do you participate in? When do you actually see your competitors? What pricing practices do you engage in that somebody might claim are trying to figure out a way to fix prices with your competitors? You sort of identify those things. And then you go out and train people what the do's and don'ts are in a way which is very important to customize to your company and your business, but is largely the same things. The reason for that is once you get out of that hardcore stuff, antitrust analysis becomes so fact-specific that it's kind of hard to generalize, and it's also hard to just lay down hard and fast rules to a client that says you can't do any of these things, you can't do any of that things. It's more one-off counseling. What now we need to be thinking about, though, is just that the range of risks is a bit broader. We're going to see theories around things that we've sort of dismissed, and that's just a new challenge that we'll have to figure out ways to again identify what the specifics of those are in the case of particular clients, and what we can do to mitigate those risks, prepare against them, be sure that competitively sensitive strategies are well documented, avoid the horrible documents that sometimes sink us before we start. I don't know if anybody saw the news of the merger that's going on now in the publishing industry, where the DOJ quoted in the complaint on the merger the CEO of one of the parties writing to someone saying the Department of Justice would never let us get away with this deal unless there is no longer a Department of Justice. It doesn't take a genius to know you should outright those kinds of things down in any form.
Yeah. So, many startups like us who may not be in an acquisition mode sometimes may not realize how we could come within the DOJ purview. So we recently did a financing round and we triggered a Hart-Scott-Rodino filing.
Right.
So, what are other things that companies should be thinking about, even if they're not in an acquisition mode?
Well, one of the interesting things is that again, is a sort of a tenet of this new Brandeis school, is that antitrust misses small acquisitions. That it's a core belief that we are too conservative in what we do, and as a result of that, in particular, the argument is made that Facebook and Google and especially those two have really grown up an enormous amount by making lots and lots and lots of small acquisitions that fell under the antitrust radar. And there is a very clear direction of don't let that happen anymore. Don't take it for granted that a small deal, because it's small, because it's a startup, because it is somebody that has very limited revenue streams, doesn't have market share in a traditional sense, is not strategically important. And I can tell you that we're already seeing that. We're already seeing informal investigations on deals that they're not informal. They're not Hart-Scott. These are not deals that were reportable under Hart-Scott, are coming to the attention of the FTC or the DOJ, and they're asking questions about it. And we'll see where this goes, because those will be extremely difficult deals to actually stop. But nevertheless, from a process standpoint, they can be very expensive and unexpected, because most people are taking for granted that a lot of these smaller deals are problematic. And give you an example of one that we've spent an awful lot of time with over the last year was Facebook's acquisition of Giphy, which at the time just it truly seemed like nobody could possibly have an issue with this. But we live in a world now where almost all tech acquisitions are an issue to some extent. In this case, the UK's Competition Market Authority took up the challenge, and there's a huge dispute going on with a prohibition decision and a lot of fighting that is going on over that.
Right. So the other thing you find often in smaller companies are participation in industry groups,
right,
or participation in groups that are using a particular vendor, where the companies get together to share ideas or things that are happening with the vendor. What do you think are some of the concerns with that?
Yeah, so that's been a long-standing antitrust issue, and the good news about it is that there's generally an acknowledgement in antitrust law that there's a lot of circumstances in which people need to participate in industry groups, enter into joint purchasing arrangements, and do collaborative things like that. That it's not always the case that it's got to be every company for itself. We have an interesting last year and a half on this issue, because during the COVID period of time, there was all sorts of needs for those kinds of collaborations and other industry collective efforts to combat the COVID situation that probably would have raised antitrust eyebrows that people sort of realized they had to let go under the circumstances. But for the most part, those things are just about avoiding the bad behavior. You know, it's not going to the industry group meeting that's the problem. It's going out to dinner at the industry group meeting with your direct competitor and you start talking about things like that. So from a compliance standpoint, generally speaking, if you get the message out about what you're allowed to do and what you're not allowed to do, you should be in a pretty good position.
Okay, great.
Maybe I can turn the tables on you a little bit here.
Okay.
So you're in the financial services world, which is clearly a world in which the regulatory push is very large. It always has been, and you know, from my perspective, the way we think about it is regulation comes in when maybe there's something about an industry that competition isn't enough. Competition won't regulate it. And that's always been sort of a concern in the financial services. So let me just ask you, Varo is the world's first digital-only bank. I'm kind of interested in exactly what that is, and where does that fit in within the regulatory landscape of financial services?
So Varo, being a digital-only bank, and what that really means is we offer all banking services, but we have no branches. So you bank with us strictly either mobile or web. We were the first fintech that actually went through the entire bank regulatory process and have a national bank charter. By having a national bank charter, that means we are regulated by the OCC. We, of course, offer accounts with FDIC insurance, so we have the FDIC, and we have a bank holding company, so we're also regulated by the Federal Reserve Bank.
So the OCC, this is the Office of the Controller of the Currency. That's a big part of the regulatory system in banking. And you are going through something that's very familiar to us in the antitrust world right now, in that we have a nominee to be the controller, who is very controversial and is advocating some pretty far out things. So perhaps you could tell us the story of that and exactly what you think that means for how fintech companies need to be looking at the world these days.
Right. So unfortunately, the comptroller of the currency is a seat that does seem to change over with administrations. And for a lot of administrations, there's a large period of time where there's an acting comptroller of the currency. And we currently have an acting comptroller of the currency. And I'll come back to kind of what we're seeing from him. But you're right, President Biden nominated Saul Omarov, a Cornell law professor who has actually quite stated views how she thinks banking should kind of move all over to kind of postal banking, and really will dramatically if her nomination is approved, dramatically change the regulatory landscape, I think. Now, the current acting comptroller, on the other hand, in a recent speech which he gave in front of the American FinTech Council last week, also has some views, but he's taking into account that crypto is something here to stay, and the bank needs to figure out how to bring it in the regulatory scheme. He talks about fintechs who are offering banking services but are not within kind of the banking purview, and how you bring them into the banking purview. So really, as you know, for most of, whether you're a bank or you're a fintech, kind of as you're planning out kind of what's going to be the regulatory kind of focus, a lot of it will depend on the nominee and kind of what the new regulatory scheme ends up being. Now, it's interesting, Yelena McWilliams, who heads the FDIC and is, by the way, a Berkeley law grad, has tended to be actually very progressive in her role at the FDIC, and she's really talked about how banking should be more open for all consumers. And she's got much more progressive views. And she's one, of course, her appointment goes for a little longer, but will likely, if she continues being in that role, will actually make the FDIC more progressive.
And then you are also dealing with, there's a figure from the antitrust world, at least until last week. Rohit Chopra was a federal trade commissioner appointed by President Obama. And he has since left the FTC to take over at the helm of the Consumer Financial Protection Bureau, which is also one of the principal agencies that is regulating the banking industry. And in almost this, keeping with this constant theme, he has an extremely broad regulatory agenda that he has laid out in his testimony on his confirmation and in other settings, which would be a challenge for a whole host of companies, ranging from credit reporting companies, debt collectors, fintech companies, mortgage lenders, like really every actor in the industry. What does that mean for y'all?
So I think his views have tended to, and what most people are expecting to come out of the CFPB is a much stronger focus on enforcement. And that would be really for all of the industry players, but a real focus on enforcement, which is, the CFPB was one of the first agencies to come up with a concept of a sandbox, where they could approve that certain things that could be tested in the regulatory environment. And it'd be really interesting if, instead of focusing so much on enforcement, the CFPB could put more effort into really promoting the sandbox and looking at how we could move the regulatory environment forward. Because so many of the regulations were written at a time when you had traditional branch banking and you didn't have national banks, you didn't have the fintechs, you didn't have a digital world, and it would be really more interesting, I think, in many ways, if the regulatory environment started looking at what is happening actually in the business world and how can we meet those needs. And I actually think at that point, they may be more able to bring many of the fintechs into the traditional banking world. Because, there's also a lot of focus on, and I think either Chopra or one of the others in their testimony actually it was even the current acting of the comptroller was thinking about, there are so many people providing banking services to the consumers that are not regulated.
Right.
And so they should think about how can we get them to be regulated.
And I think that's one of the broad themes here that we're seeing with this administration is just a greater belief in regulation. Mm-hmm. When I go back and I talk about in the antitrust world is the Timur Lina-Khan New Brandeis movement. One of the tenets of it is the belief that the way that we put it is that anti-monopoly policy is not just antitrust policy. It requires a broad interagency policy, and the executive order picks up that exact theme. It says it in so many words that this needs to be involve not just something like antitrust, but also active regulation. And so we are going to be faced and having to deal with I mean, for example, rulemaking proceedings, which in the antitrust field have been relatively rare, where, of course, it would be common in an industry regulatory agency that the DOT might set an airline rule or the FCC might set a communications rule of some kind. But now we're seeing the possibility of general purpose rulemaking as a way to bypass the courts and to actually just create objections, substantive objections to different kinds of behavior. I think we're one of the clearest examples of this that we're seeing right now is there's legislation that is pending in Congress right now. It's probably going to be passed because of this strange and unholy alliance between Democrats and Republicans who hate Facebook and Twitter for reasons that have nothing to do with antitrust. That is going to enact new rules for so-called platform monopolies. And if you look at this bill, it has been written in a way that it applies to only 4 companies in the world, which are not surprisingly Google, Apple, Facebook, and Amazon. And it doesn't bother with the application of current antitrust enforcement rules to platforms. A case like, of course, there is pending antitrust litigation against Google and Facebook and so forth. But it just simply says by edict now, you shall not do this, you shall not do that. And I think this is going to be a kind of a signature of this administration, if they can do it, is to figure out ways to just to achieve their policy objectives through more active regulation of that sort, rather than the difficulties of enforcement, like you're talking about. And I guess an example in your field would be the aim to try to get usury laws, for example, in a concern that there should be limits on interest rates, and why not? Let's just create them, right?
Yeah, currently, I mean, if you really think that usury is usually done at a state level, and now there's a movement to discuss doing it at a federal level. But what's a little more challenging is some of the discussions on having a federal usury rate is not really taking into account how you can serve different consumers. And what I mean by that is, one of the missions of Varo is really to be a bank for all of us, a bank for everyone in this room, but a bank for a lot of the consumers who are not really covered by the banking system these days. And what I mean by that is because having a bank account requires that you have a minimum balance to avoid a fee, or there are many consumers who have very small amounts in their bank account, or they're living paycheck to paycheck. So their income and their expenses time-wise don't always meet. And so they're paying overdraft fees, and the banks are making billions of dollars on overdraft fees. And so we came up with a small dollar open-end line of credit, really to help consumers who just need to borrow a little money for 30 days. And how do you help these people borrow $20, $50 just to get them past 30 days? And really just have an honest fee, whether it be a couple of dollars that you charge them. But what happens is when you take that dollar amount on a $50 thing for 30 days, and it's $3, you can come up with an interest rate that may be higher than what a congressional panel may think is a good usury rate. But what they're not taking into account, for example, is what is that person's alternative? Pay an overdraft fee? Go to a payday lender? So I think there's a lot of education to be done if we're going to do a national usury rate as to what works for all consumers.
Right, and you can imagine that this is just playing out in so many different ways in so many different parts of the law. And what's the effective strategy? Well, it's going to be partly a legislative strategy, partly it's going to be a strategy of lobbying agencies, but there's also going to be a certain part of it which is going to be a resistance strategy, which is like, for example, in fields where, like antitrust or the SEC or whatever it is, where enforcement is a major force of regulation, I just think you're going to see people pushing back, and they don't want to be sued, but there are going to be circumstances in which they're going to just say, in so many words, enough is enough. I disagree that there's a basis for this enforcement action, and they will go ahead and fight it. So, thank you. Thank you very much.